Britain's luxury real estate market is heating up even further. Investors escaping upheaval in some of the world's emerging economies are now snapping up prime properties. But as Richard Bestic reports from London, this interest is generating some controversy.
One of the fragile 5 world economies, Brazil tops the league of the rich in search of a high-end home in London. Internet hits up 115%. But the Ukraine, in the middle of an apparent political meltdown, and Argentina, struggling with a currency crisis, aren't far behind, with inquiries up 67%. According to Knight Frank, the increased web searches are part of a trend.
We can see where they're looking on our website, and it's certainly in the past, what we've seen during the Eurozone crisis, that web traffic does tend to move once instability increases in the country, political or economic.
The top end of the London housing market, like this $18 million property near Regent's Park, is a well-established harbour for international money seeking a safe port of call, buyers favouring Britain's relative stability and a tax regime historically kind to foreigners. However, the whole issue of foreigners investing in the London property market is becoming increasingly controversial. The Malaysian developers of London's iconic Battersea Power Station, for example, have reacted to a changing political environment by altering their sales strategy in a bid to ward off domestic criticism. They now promise the luxury flats coming up for sale here will be offered to British buyers before being sold to overseas customers. UK Prime Minister David Cameron is threatening a new capital gains tax on the sale of investment properties to foreigners. A small price to pay, according to the charity Civitas, which estimates nearly $8 billion in overseas cash will be invested in new-build London properties this year alone, as talk of a house price bubble in the UK capital gathers momentum. Richard Bestic, CCTV, London.